So we did the research a little bit different this month. I actually went into Market Index, the website, which I'll show you in a sec, and we grabbed their list of companies that had dividend yields of 5% or more. Now, usually I stick with either the ASX 100 or the ASX 200, but I think Market Index, they use the all odds. So the top 500 companies instead of just the first 100 or 200, but because most of the research has already been done with us, because they've already got the dividend yield of 5% or more, we only have to add on to that. We only have to eliminate those that don't make the rest of the criteria that I look for. So it should actually be a little bit simpler. And I'm quite interested in doing this because I haven't expanded my research to that many companies before. So I'm going to be looking at companies that I haven't ever looked at before. So it's actually going to be quite exciting to see these new companies that I'm not actually all that familiar with and see if there's any that might fit my portfolio, because I'm just about to do a portfolio rebalance. I've already worked out which 3 companies I'm selling from my portfolio that no longer fit my criteria. 2 of them are banks because I just want to reduce my allocation in the finance sector. I have, I think, 5 banks at the moment and I only want to hold 2 or 3. So if I sell 2 banks, I'll have 3 left, or I might sell 3 banks. I haven't quite decided yet, haven't done it yet, but I do need some companies to replace those. So doing research this month is actually going to be interesting because I will actually be using that research to decide what I'm going to buy. So let's jump into the computer and we'll do some research and figure out which of these companies are going to be great. Usually in the past 2 months where I've just looked at the ASX 100, we've only got 3 or 4 companies in each. I think we had 4 both times. And this time I predict we'll have a lot more. I don't know how much. So let's jump in and find out. Firstly, I went to marketindex.com.au, not affiliated, just went there because they've done half the research for me. I went to their popular pages and then high dividend yield. The criteria they have is market capitalization over 1 billion, dividend yield 5% or more, and they've ranked it by dividend yield. So I'm just going to copy and paste it into a spreadsheet. I really only need the company, the code, and the yield. I'm going to keep dividend reinvestment plan for now, although I probably won't keep it. It's just interesting information. Because we've already got dividend yield, the next criteria I'm actually going to look at is if there's any growth with the company, and the easiest way to do that is to look at the 5-year return. Lately, I've been doing this on Google, just putting the company code in and ASX chart, and then changing the time frame to 5 years, because that will give me a percentage of how much that company has increased over the past 5 years. And it's an easy way to find out if a company is not doing well, such as AGL, which has actually decreased, nearly 70% over the last 5 years. That's not good. I'm not looking for a particular percentage here, although anything over 50% 5-year return is good. Anything below that is pretty average. And of course, I have to say that past performance isn't a guarantee of future performance, especially if you look at the last year. You can sort of see where the company is going now, especially materials companies right now are falling because of iron ore prices. So even though they may have increased quite dramatically over the past 5 years, they may be falling right now. So that's just something to keep in mind. It's not something that would dissuade me as much, because I know that prices fluctuate all the time, but it is something to keep in mind if the 5-year has been going up, but the 1 year has been going down. Now I'm just going to sort by the 5-year return so we can eliminate some of these companies. It's really like Squid Game, isn't it? Each round we have to eliminate ruthlessly some of these companies. So I'm going to delete anything under, say, about 50%. I might keep in CSR because it's 49%. It's pretty close, but I'm going to delete all of the rest. That leaves us with a much smaller list. Next, I'm going to just jump into my trading account, which is CommSec, and have a look at dividends. What I'm looking for here is if they're stable and growing. Sometimes you'll notice that the dividend yield in CommSec is quite a lot different to other places. The formula for finding out dividend yield is pretty simple. It's dividing the last 12 months payments of dividends by the current share price. CommSec does it a little bit differently. They take into account future dividends. So the ADI dividend here on CommSec is quite a bit different than the yield that was on Market Index. So I just thought I'd work it out on my own just to make sure that the Market Index one was pretty close. So it's just a matter of the last 12 months of dividends, which is 0.043 plus 0.044 plus 0.044 plus 0.043, which is 0.174 cents. And we'll divide that by the current share price, which is $3.44. which is a dividend yield of just over 5%. So that's the one I'll be working with. Sometimes I'll come across a company where the dividends are just growing beautifully, as you can see on this upward curve for BFG. I'm going to probably mark that just because I want to keep an eye on this, because this is like perfect dividends. They're growing over time. Time to eliminate some more companies, those that the dividends were not stable or they haven't paid dividends for at least 5 years. So we've nearly got our final list. There's just one more thing I want to look at, and that's debt to equity. I usually only choose companies with a debt to equity of less than 80%. There's nothing wrong with companies that take on a lot more debt than this. It's just that I prefer companies that have less debt, mostly because if the company is failing and they have too high a debt, dividends are the first to go. And because I'm a dividend investor, I don't want that to happen. So I prefer to choose companies with low debt to equity. Also, finance companies won't have this figure. They won't have the debt to equity figure because they're the ones lending the money, not borrowing it. And we can eliminate 2 more companies. So now we have our final list. I've got Fortescue Metals, Rio Tinto, BHP, Grange Resources, CSR, Mineral Resources, JB Hi-Fi, L Financial Group, Magellan Financial Group, Beta Shares, their Global Sustainability ETF, NRW Holdings, Nexus, and Australian Finance Group. All of these are great companies that you could put on your watch list. As for the ones that I'm particularly interested in my own portfolio, I was looking at 3 different companies, and the companies that I'm most interested in adding to my portfolio after I've done this research, well, first is JB Hi-Fi. That's been on my list for the last couple of times we've done research. I quite like retail companies, so I'm probably going to be buying JB Hi-Fi. The second one that I'm quite interested in is the Beta Shares ETF, the Global Sustainability Leaders ETF. I wasn't actually looking for an ETF. I was thinking I was going to buy another single stock, but it's quite different to anything else I have in my portfolio right now. So that might be the second one I'm interested in. And the third one is probably CSR. It might be my third one. I still do like Fortescue Metals, but I already have Rio Tinto, so I'm just not sure if I want to add another materials company to my portfolio. So there you go. I've got some companies now that I'm interested in purchasing, and I'll probably do that over the next week. First, I'll be looking at the prices and when they usually fluctuate or go up or go down, and that's when I'll usually put a buy or a sell order in. I don't often do it on the same day. Sometimes I'll wait like a week in between, depending. Sometimes I'll do it on the one day if I feel like it. But that's what my plan is over the next week, is to sell those companies in my portfolio and buy the new companies that I've discovered from my research. Anyway, I hope you enjoyed this video. Take care, and I'll see you in the next one. Bye.